Welcome to the Agent Upgrade Podcast with your hosts Jasmine Alan and Alan Corey, where we learn the strategies of top producing real estate agents so you have the tools to upgrade your own real estate career.
Hey everybody, so today we've got a really special episode for you to enjoy. This guest is very near and dear my heart, to my heart, I should say, so near and dear that I'm actually married to him. So my husband, Jeff Goddard, is joining us today, and he is the branch manager here at Waterstone Mortgage, but he was a real estate agent for a very long time before he joined me on the mortgage side of things. And so his day-to-day job is basically running the branch and talking to all our real estate agents about the things that he has picked up on that really good real estate agents do when they're starting out in the business.
I agree. Jeff is a top-notch person near and dear to my heart as well. And this guy knows the ins and outs of real estate from being a realtor for a long time and now being on the mortgage side and now coaching and helping new agents get up to speed, teaching them everything to, that you're not taught when you're getting your real estate license. You come into this new career and you're thrown into the deep end. And Jeff has been a godsend to many of these agents, myself included. As soon as I got my license, Jeff reached out to me and says, "Hey, I don't know you. Let's go out to lunch." And he taught me, the differences of mortgage products and, he was a voice that I could bounce ideas off of and call at any time. And, he'd reach out to me on the weekend, want to know how my deals were going. And I didn't have anyone outside of my brokerage doing that. And he really built a great foundation for my career, which is why, I feel like I've been so successful using Jasmine team over at Waterstone Mortgage, and Jeff being the branch manager really runs a tight ship over there. I don't know if that's Jeff or you, Jasmine, but you guys are doing a good job.
You guys are too kind. Well, if it's a tight ship, it's all Jasmine's fault. Yeah.
Well, thanks for joining us today, Jeff.
I'm glad to be here. I think it's always fun for me to think about what it was like to be a new agent after having been in the mortgage industry for 10 years. I just think, oh my God, if I had known that. And so typically, I kind of break down the three things I wish I had known, and I've kind of morphed these a little bit over the years, but generally they are, if I could have known how to basically pre-qual a lead that I'm talking to, not pre-approve them, not do the lender's job, but just know if I should spend the next hour with this person or maybe talk tomorrow, that would really have helped me. The second one is I would have used loan programs to find clients. I had no idea I could do that, but we'll talk about that a little bit. And the third one is I wish I had known what was going on at the closing table. I was scared sitting there, not understanding half the stuff's happening, not wanting to ask a question in front of a room full of people. I could have been a much better resource for my clients if I'd known more about that. And I have some ideas on how realtors can do those things. So we'll start with the first one. And Jasmine will know a lot about this because she does pre-approvals every day, is like how to pre-qual a buyer. So if somebody refers a borrower to us, we can talk about the football game last weekend, their kids, and what neighborhood they want to live in, or not talk about any of that. The three things that we absolutely will always talk about, and if you just make a mental note of these three things, it's credit, income, and assets.
So CIA.
That's right. CIA. You got it. I like that kind of thing too. I couldn't make FBI work, but credit, income, assets works. So a real quick kind of primer on credit. If it starts with a number under a 6, you probably shouldn't spend much time right now with that client. Doesn't mean you can't help them get where they need to go. We'll talk about that. Generally, any credit score that's between 600 and 700, 95% of the time is going to be an FHA buyer. That's good information for you as a realtor, because that means they can only borrow up to around $400,000 in most places for a home. They can't buy a condo unless the condo is FHA approved, and you'd be surprised how many are not FHA approved. So just knowing their general credit score is helpful. And usually if they're over 700, it's probably going to be conventional.
And so you recommend just straight up asking your client first time you talk to them, do you happen to know your credit score?
Some people do that, and that's a very forward way to do it. But one thing I like to talk about is, what is your sales voice, right? When people call us, they expect us to get as intimate as saying, what's your social security number, right? That's just what's expected. So some realtors may not feel very comfortable saying, what's your credit score? If you are, and you can authentically say that and feel okay with how someone responds, that's fine. That's a very direct method. I was always kind of uncomfortable touching on credit, but I've thought of some ways that you can kind of get an idea. For example, you could say, hey, it's really important to make sure you know what's going on with your credit while we're in this borrowing process. Have you ever used Credit Karma? And if they say, oh yeah, I log in every morning, you got a pretty good idea. They watch their credit, they know what's going on. If they say, oh yeah, my wife and I, we compete, who's got the better score whenever they come out. And that is a nice, easy lead in. Now, if they say, I don't think I've ever had my credit pulled, that's a red flag.
Right. So Credit Karma is a free credit monitoring service, or is there a fee associated with it?
No, it's free.
Okay.
I mean, they try to sell you stuff, but you can at least see what your scores are. The other thing about Credit Karma is that it used to be pretty close to what we would get when we would pull someone's credit. Now it's probably 20 points off in the wrong direction. So if they say I've got a 650 on Credit Karma, that's 2 of the 3 scores you're going to get. The lender will use all 3 and then use the middle of the 3. But it's generally over the last year or so been the score we get when we pull credit's a few points lower. You might wonder why that is, but the truth is, depending on why you pull someone's credit, you'll get a different score on the same day. Buy a car, you get a 685, and you get your credit pulled to buy a house, and you get a 674. So it depends. So the credit is really important to understanding. And that's the first piece of the puzzle, C. The I is for income. That's the ability to repay the mortgage. And the only thing that I think agents should always make note of or try to figure out is whether your client is self-employed or they have a W-2 job. If they've got a standard W-2 job and they don't own a business, they can get a pre-approval from somebody like us in an hour. It's very easy to pre-approve. If they own a business or they're 1099 or they've got some other funky thing, it can happen pretty quickly, but we have to get 2 years worth of bank statements and tax returns and profit and losses and all of this. And so even the most together borrower is going to take a minute to get that to us. And then it has to get analyzed. Every tax return is different. So then we have to run it up to the underwriting manager, make sure we looked at the income correctly. We can get them there, but it's not the 1 hour pre-approval. And
that's not just you guys. It's every bank needs that extra time to process a self-employed person. So then it's also a delicate conversation for an agent to kind of fill out someone's income. Do you have tips and tricks for that?
Well, the thing about income is if they're a W-2 employee and you know where they work, you can kind of surmise a little bit, kind of approximately what a school teacher might make. She's probably not pulling in $300,000 a year on a W-2.
Maybe Glassdoor.com or some websites like that will kind of give you a range too.
You could. Imagine. Yeah. But again, I really don't think, you can let the lender do their job.
Yeah.
But just knowing if this is the client can pull up in a Ferrari, make $1 million a year, have $3 million in the bank, and not be able to get a mortgage because they took a loss on their taxes last year, right? So it just does. You can't, if they're self-employed, there's no way to tell.
Yeah. So. And I've heard of clients who have zero income, and this is I of income of CIA, very important, and but they've got 10 paid off homes. But because they have no income, they couldn't get a loan. They couldn't cash out refi. They couldn't do anything, right? And possibly they had some of those losses show up so they don't have to pay taxes because they've got the best accountant in the world to help them, live the lifestyle that he lives. So yeah, I understand that income is super important. And
a lot of the clients that you realtors want are people that are very successful and have a lot of businesses and a lot of money. And unfortunately, that means you're going to need a lender that can sift through and make sense of all of that. So,
right.
Yeah, another little red flag to watch out for when you're talking to somebody and they tell you that they're self-employed is like, oh, how long have you had your own business, right? Because if it's like, oh, I started last month and it's going great, I'm making a lot of money, that's awesome. However, that's going to really suck for the loan part of it.
Yeah. Now, don't cut your client off.
No.
Either let the lender do their job because, for example, that person may have a spouse or a partner that has a W-2 job, and we just haven't talked about that person yet.
And that self-employed person, when you mentioned how long have you been doing it, is that because it's easier or is it necessary that they have 2 years of experience in that self-employed job?
Yes. Do you have when you're self-employed, in order for a lender to be able to use your self-employed income on a traditional, conforming, conventional government kind of a loan, you have to have a 2-year history. So just because you started and you get paid on a 1099 and you're making 4 times more money than you were in your W-2 job, we're really not going to be able to use your income to qualify you until we have proven 2-year history at this type of income. It doesn't necessarily have to be the there are some nuances there, but 2 years is just a safe cutoff for that kind of thing. So if somebody has a new business, that should throw up something in your mind that says, hey, they really need to talk to a lender before I put them in my car.
All right. So how about this? So this is a W-2 person, but they've switched careers entirely. And maybe they're making the same or more amount of money, but they used to be a doctor and now they're in a lawyer, kind of thing. Is that going to be a problem, switching careers?
I don't usually find that to be a problem, especially on conventional financing. We're really just looking for a 2-year work history, right? We need to know where you have worked, but I've never had a loan turned down because you were a doctor and now you're a lawyer.
Nobody becomes a lawyer once they're a doctor, though.
Right, exactly. Unless you switch to something that's fully commissioned, like you were a doctor and now you're a fully commissioned attorney, and then we don't have a 2-year history. So we're getting a little bit into the weeds on the income stuff, but it's important for especially newer agents to kind of just have your bearings and know some of the stuff when you hear it, that it
I think it's really helpful when a realtor says, hey, I'm referring this client to you. FYI, this is what I picked up on in the conversation, so that the lender knows,
right? Hey,
I'm going to look a little harder at this employment change and just make sure there aren't any issues that are going to trip us up. So we talked about credit and income. The third one, what's the third one, Alan?
CIA.
CIA, assets. And really assets is where the heck's the down payment coming from? And most people that are new to the business don't understand this, but we have to get 2 months of bank statements from every borrower. And I always thought where the money went was what was important. It's not really. I mean, it's important how much money somebody spends every month because then they'll have money left over to make their payment. But any money coming into their account has to be sourced. And I get kind of excited about it because it feels like we're really part of the FBI, because this is really all has to do with anti-money laundering laws. And real estate is a very easy, well, I shouldn't say easy. It's a very common way that people can wash money in real estate. So there are lots of rules in place to help prevent that. So it doesn't mean that so basically a great way for a realtor to honor the client, help them feel like you're not making any assumptions about their financial fortitude, is to say, that's great. You want to buy a house. Just so I know, are you thinking about getting financing or paying cash? And then just stop and listen, because how they respond to that question will tell you a lot about them. If they say, well, I could kind of do either one. I want to take advantage of the great rates, but I don't want to take money out of the stock market. That can tell you a lot about who you're dealing with. If somebody says, who the heck has $200,000? You're like, okay, I understand, right? So we need to get you with a lender.
I mean, I've been burned by that several times when I was first starting out, where someone it's always the person who's like, oh, there's no worry. I have the funds. Just show me this house this weekend. I promise you, not I have so much money. It's not going to be an issue. And that person always has some issue, because it's not that they're lying to me, is they're probably successful, but they have their own employment business, and they've got losses on their taxes to save on taxes, even though they're quote unquote sort of phantom losses in many ways.
Yeah. Oh, tell us your funny story, Jeff, the one about the son and the granddad.
Oh gosh. Kyle, I won't say his last name. I don't want to out anybody. Kyle was one of my first buyers, and I was so bad about getting people pre-approved.
This is when you were an agent?
This is when I was an agent. And I said, hey, Kyle, you want to buy a house? He said, yeah. I said, come on, let's go. After we'd seen about 3 houses, I was like, so what are you thinking about on the mortgage front? He says, trust me, Jeff, I got it covered. My granddad owns a mortgage company. I'm like, done. All right, we're good. Yeah. So we get old Kyle under contract, and this will tell you how long ago it was. I faxed the contract to the lender, who was in the next state over. I won't say which state. I'll try to keep it generic. The phone rings immediately after I send the fax, and it's Kyle's grandfather. And he says, Jeff, this contract has Kyle's name on it. And I was like, yes, sir. He was like, Kyle couldn't qualify to buy a loaf of bread. You need to put my name on it. I'm like, I don't know if he was yelling or he's hard of hearing. I don't know. It was loud. And you need to put my name on the contract. So I said, well, let me talk the seller into letting us switch out the buyer. And sure enough, the granddad ended up buying the house. But that's how close I was to having done all that work to get this guy under contract. Right. And oh man, but I looked out. That was a lucky one. There were things that didn't turn out so well. But it's you got to stub your toe in these industries to learn. That's the only way you really learn good.
I know there's probably newer agents listening to this where it's like they're just excited for their phone to ring. And a part of me wants to say, sure, take them out if you got nothing else to do. At least you're learning what questions they're going to ask you. You're going to learn about whatever neighborhoods and price points and homes. You're going to, you're working other muscles. But I think the warning here is, hey, they might not pan out until you sort of do the CIA kind of checklist with them as much as you can without getting too personal and too deep into their finances. But as you get busier and busier as an agent, you're going to want to spend and focus your time on the people who can actually close a deal through a pre-qualification letter.
Yeah, I think that's true. When you send somebody to a lender, those are the 3 things they're going to drill into right away. So the more info you know about those, whatever's appropriate, whatever feels appropriate, it'll help you, in terms of prioritizing who to spend time with. So I agree with that, Alan. We can move on to the second one if you want.
The second one, well, we covered CIA.
What's next?
You got other points? Yeah.
All right. Well, so that's my first thing. Just learn how to pre-qual your own people enough to know if you should spend time with them.
Yeah. Okay.
Second one is use loan programs to find buyers.
That's right. So this is learning what loan programs are out there and then trying to use that as a magnet to lure leads.
Yeah, or to target certain groups. For example, a lot of people don't know this, but there are loans specifically for doctors. And people call them physician loans, doctor loans. You could take a flyer knowing nothing about the details of how a doctor loan works, except the basics, like 0 money down, can go up to a really big loan amount.
Giant jumbo loan with 0% down.
Greatest loan ever on the planet, whatever you want to say about it. Take that flyer or just know that it exists and reach out to your doctor.
Oh, your personal doctor.
Everybody knows a doctor.
Yeah. Okay.
Right? Yeah. And say, hey, I've been spending money in your business for the last 20 years. I want you to help me with my business. There's some great things, and you don't have to say it that way, but you could say it however it's comfortable to you. There are specific loans specially designed for people in your profession. Did you know about them? And if they say, well, I've kind of heard some stuff, you can just start that conversation. And your doctor looks at you as a client. And your client, he's going to want to keep you as a client, or she, and you can go to your doctor and say, I'm looking for other physicians that this program might be able to help.
Yeah.
And I think that really gets to a key thing is that most people we know, we do business with, we're friends with, whatever, they want us to be successful. And it's really important for a realtor to ask for that referral, to ask to be introduced.
Yeah, that's interesting that I've never thought of this, because like I have no problems asking my barber for the business, my who have the people in landscapers, basketball games. But for some reason, a doctor, I don't know, I would never, or my dentist, why wouldn't I never approach them about it? Because I guess I'm in the headspace says, oh, this is all about me and my health and, whatever, or there's intimate in many regards. But now.
Or it might not even be that it's your doctor. You could. I think the triangle of trust with our friends and our sphere of influence is really important. I could go to my mom if I was a realtor and say, hey, Mom, I know you really like your doctor. I'm focused on doing more business with doctors.
Yeah, that's true.
Mm-hmm.
Could you introduce me to your doctor? Because I would like to talk to her about these loan programs.
Yeah.
Our friends and family and people that have us as clients want to help us. We just need to ask. So another example would be a teacher loan. Go ahead. I'm sorry.
Before, I want to also go back. A doctor loan, I love this because they have CIA, right? They're probably going to have pretty good credit. Income, we already know is good. They probably have the means for down payment and assets. And you could really take this idea and run with it because there's physician and doctor conferences all over the United States all the time.
Exactly.
You could get a little booth and just
sponsor it, get a booth.
Just be the doctor realtor, and these guys are just going to close on their high W-2 income all day for you.
I tell you what we used to do with pre-COVID was we would just take boxes of donuts and head to the hospital.
Yeah. Oh, nice. Yeah. Yeah.
With some flyers. The nurses always will let you drop food off it. At least they used to, right?
Yeah, because we have a loan program for first responders and nurses as well. So nurses are even easier because nurses are always just gentle and kind, and they love to help anybody out. And we've gotten a lot of business that way from the nurses and doctors. So it's a great. It's a great thing, and especially some of our nurse loan programs are very low down payment, and it's just...
Well, here's the dirty little secret, though. Guess what? It doesn't matter. The doctors frequently don't use a doctor loan.
Yeah.
The teachers frequently don't use a teacher loan, but that's how you got the connection.
Oh, so you mean, and you may rope them in with that, and then when they go down to getting the rates and the fees, they may switch over to a conventional loan. Is that what you're saying?
Yeah, and to keep in mind that we were talking to a teacher last year about a teacher loan, and she came to us because I had gone to the school and said, hey, we've got a 1% down teacher loan.
Wow.
Now, it's really important as realtors and mortgage people to understand that when you say those words, lots of people don't know what they mean. I can't tell you how many times I mentioned a 1% down teacher loan and they say, wow, 1% is a great interest rate. And I'm like, okay, that's not what I said, right?
Yeah, right.
So,
but that's what they heard.
Yeah.
And so this is what we do for a living. And it's important to know that teacher probably knows everything there is to know about teaching. But she doesn't talk about rates and prices and all that stuff every day. So we had one that came to us for a 1% down teacher loan, only to find out she's about to sell her current home and have $200,000 in equity to roll into the new house. And she thought she didn't have money for down payment.
Yeah.
So, I mean, you just never know. But that opened the door. And she's obviously not going to use a 1% down loan. She put 50% down.
Right.
But that started the conversation. So anything you can do to make people feel special. You want to make sure you have something, but it usually ends up not being that loan.
And I promise you close one teacher in a school on a 1% down payment, they're going to tell every other teacher about that program.
Yeah.
And you as a realtor, and you will become, you're the lifesaver. Like most teachers are like, I worked so hard. Both my parents were teachers. They worked so hard. There's no way I can afford a house. Yeah, you can. It just takes 1%, kind of thing, down payment, and I feel like that both those loans, there's a catch. Is there a catch to either one of those? That
there's not. The catch with the some loans will have a catch, and I think what you mean by that, Alan, is there a reason? What's the catch to there being such a low down payment? A lot of the really great zero down programs totally went away with the pandemic economic situation. They'll come back, I think. But right now, super low down payments come at a cost. And the cost currently with a lot of the different specific niche loans is that maybe they're not a 30-year fixed or something like that. Maybe they're an adjustable rate.
Okay.
But there are lots of other really low down payment options. So you need to make the introduction, get in touch with a person. They may say, I don't have any money for a down payment, but when they talk to your lender, the lender realizes they've got $100,000 in a 401k that we can use for the down payment and then just put it back in over time after the closing. So don't make too many assumptions. Maybe they could get gift funds from a family member.
Right.
But these programs will open. Now, the doctor loans are really the Cadillac of loans. They're considered lower risk because physicians will most likely be gainfully employed for a long time and make lots of money.
And people may not know, everyone associates doctors with being wealthy, but if there's, studies on this, they're actually always playing catch up because they graduate college about 7 years later than everyone else because they have to go to all this residency program and they're not making any money, right? And then they've got $200,000 to $400,000, $500,000 of student loan debt. And so by the time that they are an official, doctor working on their own, making hundreds of thousands of dollars a year, they've saved zero, up until that point. They've got this massive income now, but they also have all these debts to pay off. And so I think banks like them because they're always going to be employable, but they don't have the down payment yet because they're new in their career, right?
And that's one of the key aspects to those loans is a very low down payment or no down payment. And if and we've seen almost $1 million in student loans, like a ridiculous amount of debt that they're starting off their career with, and they typically get rid of that debt very quickly and they pay it down. However, their debt to income ratios will look crazy. And so one of the great doctor programs that we have just uses 10% of that debt payment for qualifying. So if they have a $4,000 a month student loan payment, we only have to count $400 against their debt to income ratio. Some of the other doctor loan programs just say, hey, we're not even going to look at that.
Okay. Yeah.
Mm-hmm. So another one of the things that I think that you do really good when you're talking to the new agents is talking to them about their wedding list.
Yeah, I want to get into the two lists, but we haven't gotten to our third thing yet.
Okay.
I'm going out of order.
But that's good. I like that. Understand what's happening at the closing table. One of my first deals as a realtor, it was the day before closing, and I called the attorney that my real estate team used religiously. And I said, hey, you got any spots tomorrow? I got a closing. And they were like, well, yeah, 2:00, but we got to search the title. Like, why are you telling us now? And I was like, really? I didn't even know. So, I mean, it can really be valuable to find a closing attorney, especially one that somebody you work with already has a relationship with, so they feel like they kind of owe you. They want to build a relationship with you. Either after or prior to your first or second closing or something, sometime early on, grab that attorney. You just sent them business. They want you to do that again. And it's not just their $450 attorney fee they make. They make money from issuing the title policy too. I mean, it's a business and they do well. What I think is important is to walk through the closing statement and any of the stuff that they do behind the scenes that you don't hear about, but you need to kind of know is happening, so that you can feel comfortable at that closing table knowing what's going on.
So like a mock closing with just you and the closing attorney. I agree with you. If you reach out and say, hey, can we set this up and maybe after hours or whatever, yes, they would want to earn your business. And I think they would be very gracious and helpful to kind of walk you through what happens at a closing. And to answer your question, if you're a new agent, the title issue, the fastest they typically turn around is 2 weeks. So what I usually do, and I think most agents do, is as soon as you get someone on a contract, you send that contract over to the closing attorney. Let them get on it, get on a schedule on the closing date, and it may move around, it may shuffle around, but at least there's goal line that we're all aiming for.
Yeah, do like Alan does, not like Jeff did.
Well, you learn. I don't remember what I did on my first deal, but I was equally naive.
Yeah. So I think having now the two lists that Jasmine referred to, I think are super important for a new realtor. The first one is what I call the wedding list.
Yes, that's the one I like a lot. I think it's great.
So if you want to reach out to your past clients and you're a new agent, it's going to be a very quick job to undertake. You don't have any past clients, right? So to me, your sphere of influence, or anybody you would invite to a big wedding, if you already had a wedding, then you got your list, right? So, but if not, think about who all those people would be. Those are the people that love you, care for you, will listen to the phone when you call. You can ask them to help with your business. They'll want to help you. Those are the people that will be the group that you're working to find business when you start out. It's very compelling to go to some of the online lead sources. But we've tried every one of them. We don't do any now because we got burned so many times. Like, it just makes more sense to go to the people we know and love that can refer business to us and just maintain those relationships. So I sent out a letter to my quote wedding list when I was a new realtor, and that was almost 20 years ago now, and I still get phone calls from people. I remember your letter, Jeff, and back to people don't understand our business. They still think I'm a realtor. I've been doing mortgages for over 10 years. That's fine. I'll refer it to one of my realtor friends, but that letter makes a difference. And a lot of people would think posting on social media is enough. I think that's important, but you got to send that letter. Plus, it forces you to have your database down to know where somebody lives. Once you have their address, you can do all kinds of other stuff. You can send them an unsolicited video CMA to, all that kind of thing. Go ahead, Alan.
What would you recommend they put in that letter? I
said something to the effect of, hey, I've got a new opportunity ahead of me. My life is changing. I'm working with this team. Back then I was with Remax, and said a little bit about who we were, and I would love to sell you a house. I don't remember exactly, but just kind of make sure they know and put your business card in there. People remember getting something like that from somebody they know and love.
Yeah. And I think that there was, I was just reading in a book today, actually, like there is a lot of value that people place on getting a handwritten card. It's not necessarily the fact that you sat there and hand wrote it, but it's like we all know how much effort it takes in this day and age when you can just click and have Amazon deliver it, or you can use handy written, or you can use 1,000 services that'll knock out 1,000 cards, right? But just making the time to actually send that and mail it with an actual postage stamp. I think people value that. I think that that's kind of gone away, and there is a currency that's not necessarily super efficient, but I think that people will appreciate it. And like to your point, I think that they'll think of you as a realtor for a really long time to come because you took the moment to actually reach out to them that way.
And I want to piggyback off that comment. Digital sort of information, a feed in social media, Instagram, even an email. It's really easy to just skim and dispose. But there's the two things that I think are huge is like your card in the mail, right? First, you at least you get excited. What do I have in the mail today? Oh, it's not a bill, right? Or it's not some spam letter. This is from my friend. Oh, he wrote me a letter, or she. That's exciting, right? And then so you have positive thoughts. You open it up. Oh, that was thoughtful, and you're most likely not just going to instantly throw it in the bin. You're like you'll keep it on your counter for maybe a week or two, and maybe look at it again and then throw it away. And then I feel like the other thing that sort of is a hybrid of that is a voicemail. Like no one just deletes a voicemail without listening to it, right? Like, and so especially if it's from your friend or someone you know. And so all those agents that may be scared of picking up the phone and calling, and then what do you say or what do you do? Like Jeff said, this is your wedding list. These people love you and support you. One, they'll probably answer, but if not, they're definitely going to listen to your voicemail and appreciate that it's a non-spammy voicemail that's, a bill collector possibly, or whatever it is. So I think that's sort of a hybrid as well. But I definitely think if you compare the two, a handwritten letter will win every single day.
And I got a question today about the wedding list. I said, and just have a regular system of reaching out to these people. Well, Jeff, what do I say? Well, first off, how you doing? What's happening? And second, ask them about where they're living. Anything about their house. Are you guys planning on doing any additions to make COVID life easier? Yeah, we've been thinking about it, but we can't find an architect. Well, I'll find you an architect. In anything house related, that conversation has to happen and happen frequently. Well, I've got a great painter. If that happens over the next 5 years, when it comes time for them to sell their house, who are they going to call? You've just made their life easier. So I think when you reach out to your wedding list, it's good to have the second list, which is the resource list. Okay.
Before we get in the resource list, and I think I might know where that's going. Like sort of an icebreaker that I've used before is, hey, I want to call this person. I don't know what to say. And so I look up just to see if there's a house for sale in their neighborhood. And then that it could just be a call and say, hey, I noticed that so-and-so has listed your house. Are you friends with them? Do you know the story? Because I have some clients who may be interested and I saw you live in the neighborhood. Whether it's true or not, you've started talking about real estate and it's just a normal call. I'm not trying to sell you something. Oh, I'm real estate. I'm so involved in real estate. I know about the house that's in your neighborhood for sale. And I
think that's great. Alan.
Yeah. Maybe look up their name and be like, are you friends with Joe and Jan or whatever? And then part two would be, even if there's nothing for sale and you really, really want to talk to them, and then drive the neighborhood and then call that person and say, hey, I noticed that your neighbor's doing new construction. Is that something for themselves, or are they going to sell it when they're done? And, sure, it's probably something for themselves. Or you can say, hey, I drove by your neighborhood because I was showing clients and your yard's beautiful. Or I noticed you're building a new clubhouse, whatever, in the down the street. At least it gives you something to talk about that you've been in their neighborhood because you're working real estate. And I think both of those go a long way to that icebreaker for a lot of people that are it's trouble to call. Like, what would I even say?
Yeah, I think that's a great idea. Mm-hmm.
So let's hear about the second list, which you said was the resource list.
Yeah, the resource list was the only mailer that I did when I was a realtor. And a lot of people do these electronically now, but we actually printed them out. And it had everybody from divorce attorneys to cement guys to lenders, home inspectors, anything to do with anybody that we would refer to our clients for anything. If you want to get your house painted and you Google best house painter in Atlanta, you will get nowhere. I mean, you could find somebody, but the fact that you are referring business as a realtor to a painter and you have experience, that painter is going to treat your clients better. If you need something to happen quick because the house is hitting the market on Monday, you need somebody that's going to jump when you call. Hey, I've sent you 12 people over the last year. You're going to move your schedule around if you can and get this thing ready for the market. So the other thing about having that resource list, let's take the painter example. You've been sending a lot of business that way. When things get slow or you need to do some prospecting, you can call Robert the painter and say, hey, I'm a little short on my sales goal for this year, so I'm reaching out to all of my business partners to see, because sometimes you just have to ask, who do you know that needs to buy or sell real estate right now? Again, a lot of people just don't think about it. It's not their business. It took my mom 7 years before she really got the hang of, when somebody's doing anything finance related with a house, I should tell them about you, Jeff. Yeah, and now she's got it, right?
Yeah.
But she was like, oh, yeah, so-and-so refinanced their house. I was like, what? Why didn't you tell me? Oh, I forgot. You do more. I'm like, yeah. So even the people that you know and love have to be reminded what you do, and how to refer you. I think that's important for us to tell people how to refer us. But the resource list is really cool, especially if you have a niche. So, for example, there's a realtor in town that's into the all of the mommy groups. She's got young children, and on her list, she has the painters and the architects and all that stuff, and she has lactation specialists and all these other mom related things, and that's her sphere. Yeah, that's her sphere. And so when her clients look through there, they remember that about her.
The best cloth diaper dealer in town.
Yeah. Exactly. So, I mean, really, those two lists, I think you can build. And if you don't know a painter, ask a good realtor that has one and piggyback on that. But those two lists, you can build an entire marketing platform around and not spend a single dollar other than printing some paper for letters and contacting people and staying in touch with them.
And then also just kind of being organized about your, how, like having like once a year you mail out the resource list, or like every day you call 5 people off your waiting list, right? Just like kind of getting yourself into a routine where every day you block some time and are consistent. Because I think that if you make 3 calls one day and no calls the next week, right? I think it's just kind of getting yourself into a habit where you're consistently reaching out to people. Like we have these annual mortgage reviews that we do, right? And so I know every year I'm going to reach out to my clients at least once a year to just check in with them, right? But you have to have a system, right? It's not just going to happen. You have to have systems in place that are going to make these things go over and over and over again, because as we all know, just telling your agents or your clients or referral network one time it's not going to stick, right? They need to kind of know that you are the guy or the girl for real estate needs. And
you're building a reputation of someone to go to if you have questions, someone who is a resource for information. And if they trust you on your lactate consultant, they're probably going to trust you on a house, right? If they trust you on the painter, and that painter shows up and does a great job for a decent price, that reflects back on you. So you don't just want to willy-nilly say, oh, here's a painter I found on Yelp. You should vet that person or call past clients. And here's an icebreaker. Hey, I know you just moved. Have you done any recent painting? Because I have another client who's looking for a good painter, and I thought maybe that you were going to repaint that primary bedroom. Did you have a good experience? And
that's great. Yeah, I like that.
Then you're reaching out. They're helping you, and you're sending that help to someone else.
I think that one of the best people for realtors, and not to sound like I'm self-promoting, but just really valuable person on that resource list should be your number one go-to lender.
Yeah, we had an episode about this where was that my episode? It might have been mine, where I said, pick one person. I don't want to give you 10 lenders. I want to give you one lender. I don't want to give you 10 painters to one painter, because then you amplify your relationship with that one person. But a lender is the most important, I think, because you can't get a deal done without a lender. All those other resources happen after the deal closes, but your lender is your partner to get that deal closed.
Yeah, I think that it's really important for agents to know how to refer a lender. And I want you to think about it this way. If I was referring a client to you, Alan, as a real estate agent, and I said to my friend Bob that I was referring to you, hey, Alan's great. He'll work for almost no commission. Go talk to him. You would be like, what the heck are you doing? Right? And not that it's anybody's intent, but everybody talks about rate first. Talk to Jeff. He'll get you a great rate. Well, I can always find you a lower rate than what you find. And if you keep looking, you will find a lower rate. But I think it's really important to not let your clients focus on rate. And if you think about like your commission as a realtor, I was really bad protecting my commission. I would negotiate it down too often. I could have done a better job. But one of the things that as a realtor you need to do is understand how to have that conversation. Go ahead and play it out, play it out in the shower. Think about how you're going to respond when somebody says, I want you to work for half price. So my old business partner, he would say, well, which part of my services do you want me to omit? To me, I always thought that sounded not like that. That's not what I would say. Right.
But
if you met him, you'd be like, yeah, it sounds about like Sean. Yeah. He would say that. And he would be pretty good at protecting his commission. Now, it could be as simple as my broker won't let me cut my commission. Right. Whatever your thing is, have that. But the reason that I'm mentioning that is that if you go up against a flat fee realtor, the difference is you're offering better service as a full commission realtor.
Right.
You're going to be more available to do the job that needs to get done. As listing agents, you see it all the time, or the buyer's agent with a flat fee listing. All of a sudden, you can't get a hold of the listing agent, and you're managing both sides of the transaction. So, I mean, it's a different business model, not right or wrong. It's just different, right? So if somebody's getting the lowest rate, all lenders get their money from the same place. So if they're getting the lowest rate, they have to be keeping their costs very low. On our team, for example, we're hyper-focused on purchase business and keeping realtors happy and getting the closing on time. And so we have a very heavily staffed team. When somebody calls, what happened last week was the closing disclosure was supposed to go out 3 days before closing. They were working with an online lender, and they got their loan denied 3 days before closing. But they wanted to work with that lender because they had they had a really good rate. I think it's more important to have a competitive rate and a very competent lender, because we figured out what that lender took 27 days to do in the first day and a half. But I took members of our team 1.5 days of working with this very complex tax situation to figure that out. But we got it in 36 hours. And that's what you need as a realtor. You need somebody that can figure that kind of stuff out quick and not get you 3 days from closing and it all falls apart.
Yeah, I think that's great, because a lot of people are just all about rates, and you can have the lowest rate. It's just how many points are you going to pay down, kind of thing. Mm-hmm. But to me, what I get, not to feel like a commercial for Jasmine team, Waterstone Mortgage, but I say, this loan's going to close on time. All those other guys, sure, you may save $100 here, something there. It's not, we're going to be competitive. Give Jasmine team a chance to match whatever rate, but I can promise you they're going to close on time. They're going to be very transparent. They've got a huge staff. They're going to hold your hand every step of the way, so that this buying a house feels like a roller coaster. This is going to be a straight line, that's no ups and downs. It's going to be a very smooth process,
especially in this very competitive buyer's market.
Yeah.
Maybe a few years ago, you could get away with pushing the closing date a couple weeks if the lender doesn't get it done, but they'll just go to the backup offer now. I mean, that was all cash. That doesn't even have a loan, right?
Yeah. And I had a listing, and one of the people who applied, there was a cash offer, and then there was one from your team getting a mortgage. And I've done so many deals with you. To me, a pre-approval from Waterstone and Jasmine team was just as good as cash. So I had no problems recommending my client that take the one that has the mortgage that's a little bit higher than the cash offer, because I know that these guys are going to close. There's no worry there. And that's something that it took years of doing business with you, where I trust you ultimately. But it's. If that was any other lender, big name chain, Wells Fargo, Banks of America, Quicken, anything, I would be like, run away, because they don't care if it closes on time, because they'll just say, we're going to close it tomorrow or in 2 days. And then everyone's got to reshuffle their moving trucks and their moving plans. It doesn't hurt their bottom line, but I know
it's a different business model. I think about it a bit like, I kind of think that some of the big lenders that are primarily online, that aren't local relationships where the actual team that's getting it done, I think they probably have a 75 or 80% success ratio.
Right.
But if you've got a commission on the line, and I said there's a 25 or 30% chance that you're not going to get that, even if you do everything right, I would not want those odds.
Right. Exactly.
So I think it's really important that your clients know service matters, especially in a competitive market. Get a competitive rate. All the lenders get their money from the same place.
Right.
It's if you're going to pay a little bit higher rate, that means they're offering higher service. If you had two identical hotels right next to each other, but one had a butler in every room, that one's going to be more expensive.
Yeah.
And so you have to find a nice balance, let's get a competitive rate and a very competent team to help. And that's the lender that's going to jump through hoops if you have that relationship with them.
And when you say all the lenders get their money from the same place, what do you mean by that?
Well, contrary to what most people probably think, is that lenders don't have just all this money that they decide to go lend for 30 years at 2.875 return. That, like, if you and I had $1 million, we wouldn't invest it for a 2.875 return, right? So basically, it's like a retail shop. Lenders have money in a warehouse. It's called a warehouse line. Typically, that's how it'll work. And they fund the transaction at the closing table. Realtors get their commission, seller gets the money, client gets a house, and then they take the paper and they sell it to somebody like Fannie Mae, Freddie Mac, some other big investor. And then they get their money back, they make a little piece, and they go do the whole thing over again. So we're all getting our money from and it's a competitive market, right? If we can get 3.25% from Fannie Mae today, but we could get money cheaper from Chase and offer that lower rate to our client, then we're going to do that. So it's a very competitive market. It's not like anybody has the in on some big amount of money that nobody else has access to.
So this might be something, if this is sort of a new agent episode. First, I want to mention that when you sell a mortgage or loan gets sold from one bank to another, which you have no control of, the terms don't change. So it's whatever you lock in at the closing date, the terms will not change. And then maybe, can you give the difference between walking into a bank and getting a loan and then talking to a mortgage broker who represents many different banks and getting a loan?
Yeah, so I like to think of it as three different types of lenders in the world. There's a bank that has a vault full of money, and they'll give you a loan.
And they'll only give you their own loan products. They might not have the doctor's loan or the teacher's loan. It's like, this is what we have with our own money, right?
Yeah. Mm-hmm. Okay. A lot of times those are called portfolio loans. Yeah. And then you have a traditional mortgage lender, and the terms get thrown around by different people. They're really interchangeable, but if you really want to know what's happening behind the scenes, a mortgage lender has a warehouse full of money that they're funding and then selling the paper to somebody like Fannie Mae. And they just keep turning that over and over like a retail shoe store kind of thing. They've got inventory, they're turning it over. And then a broker is just like what you would think. They find somebody with money, they find somebody that needs money, they facilitate the transaction. So a broker typically will have access to a lot of different options, but they will have less control over the transaction because they don't work for the same company as the underwriter.
So let me repeat back to you. So a lender, the second option you give, that's sort of like the big banks where people probably have their checking account and their savings account with Chase, Wells Fargo, something like that.
Well, there are all kinds of shades of gray. Most Waterstone Mortgage is both owned by a bank and a mortgage lender. Okay. So kind of in that middle. And so we can offer a bank loan that Waterstone Bank's going to hold on their books. Gotcha. Or we can sell a loan straight to Fannie Mae, which is kind of traditional mortgage lending, or we could broker it to some third party and find maybe something that's outside the norm. Okay. So some lenders can do a variation of all three.
So you could sell whatever Chase is selling and whatever Wells Fargo is selling, whatever Quicken is selling potentially.
Yeah. So one interesting thing is like we can hand a loan to Chase completed.
Yeah.
And they didn't have to go through their retail channel. They just said, okay, Waterstone, thank you for giving us that loan. And then we had the boutique experience, nice hand holding. We got the whole thing done. And then the loan went to Chase.
And if you have a bank account with Chase, it'll show up. The mortgage with Chase will show up in your bank account, like online, the same way as if you went directly through Chase. So
sometimes you guys do such high volume, you get it cheaper than if that person would have walked into Chase to get that.
Yeah, because we're getting wholesale rates, right? Because we're a lender, so we're getting wholesale rates from Chase because they want us to have an extra incentive to be able to go out there, have a super good rate, and get the business, and then ultimately sell the servicing to them. So yeah, there is a lot of different shades in there, and I think it's kind of hard for consumers, and even sometimes it's hard for real estate agents in the business to figure out what is what. But I think the most important component is that you want to have your team on the street in charge of underwriting, processing, funding their own loans. You don't want an underwriter that's in Chicago while you're trying to fund a loan, in California. You want your people working and being in charge of the funding, because otherwise what happens is if you're a broker and then somebody else is supposed to fund the money and that funding desk is in some different time zone and you don't have a number and you don't know who's funding the loan and you're sitting at the closing table, that's when you kind of get into like those really crappy situations. So whichever lender you work with needs to be somebody that controls the process in-house, start to finish. It does not leave, their office to get done.
And what I like working with brokers because they'll talk to real estate agents. All those other lenders, they'll only talk to the buyer, the client directly. They don't talk and share information. Rarely. I mean, I guess there are probably some once you build a tight enough relationship, but I found mortgage brokers seem to be very open and willing to say, hey, I need your client to do this today. I've sent them 3 emails and 4 voicemails, where I would never get that sort of feedback from sort of a big bank or national chain or people.
And I think you're kind of using the terms interchangeably now too, Alan, because I think, people say mortgage broker, lender, banker, or something. It really, that relationship that you find with that lender, if it's solid, you'll know pretty quickly how they perform. And that's a good question to ask. Do you guys do everything in-house?
Yeah. Okay. That's awesome. Jeff, this has been, I would imagine, the most helpful thing. Listening to this is what I wish I had my first week on the job, kind of thing. If there is an agent who has questions, how best would you recommend they can reach out to you?
My calendar is always open. You can find me at jasmineteam.com.
With Jeff at jasmineteam.com?
Jeff at jasmineteam.com. If you want to sit down and talk through, hash out different ideas, I can share some of these resource lists and things like that. Maybe think about your specific sphere of influence, what you're involved in, brainstorm ways to get into those networks and market to them. I always love meeting with new agents and talking about plans like that. So, or even not new agents, any agent. So I'll always spend time on a video call with a realtor and talk shops.
If you've given out your email, you might be on a lot of agents' wedding list now, by the way.
Well, that's a very good point. Last year only one agent called me and asked for a referral. And I was like, it's amazing how many realtors we talked to, and only one called and said, who do you know that needs to buy a house?
Oh, wow. That's awesome.
Yeah. So don't assume that people are calling already, and don't assume that somebody's farming a certain neighborhood. In our old house, we didn't get a single piece of real estate mail the 7 years we lived there.
Yeah.
So
anyway. I cut you off, Jasmine.
Oh, I was going to say our next session with Jeff is going to be, how do you work with your spouse in the business 24/7?
That's tough. Agents need that lesson for sure. There's a lot of marriage agents.
A lot of married agents out there. That's true. It either works or it doesn't. It's pretty simple.
Yeah. I think for us, we're in the bucket where it works really good, and we watch each other's backs throughout the day, and it works really good. But I think that there is people on the other side of the fence, but we can share any insights next time. Next time we'll talk about that.
I love it. Well, Jeff Goddard from the Jasmine team, branch manager at Waterstone Mortgage. Thank you for joining us. It's been wonderful. Always a wealth of information, and we'll definitely have you back for that marriage interview.
Thanks for having me, guys. I love your podcast.
You have to say that.
So you did that, honey.
Still like it. Thank you.
Thank you for listening to the Agent Upgrade Podcast. If you are an agent looking for a new mortgage lender, start with Jasmine at jasmineteam.com. If you want to learn about real estate investing and working with investors, check in with Alan at thehouseofac.com. See you next time on Agent Upgrade.